Global stock markets have fluctuated this week, struggling for direction amid contradictory drivers. On Monday, the Dow rose for the seventh straight day. The S&P 500 climbed 0.3%, while the Nasdaq lost 0.4% as tech stocks came under pressure. The next day, Wall Street stocks suffered some losses amid the lack of progress on talks over the stimulus package, coupled with worries over the coronavirus pandemic and tensions between the U.S. and China. The S&P 500 lost 0.8%, the Dow Jones Industrial Average dropped 0.4%, and the Nasdaq Composite shed 1.7%. Asia-Pacific markets recovered slightly from earlier losses on Wednesday as investors continue to monitor coronavirus developments. Russia says that it has developed the first vaccine in the world, which raised hopes for treatment but left markets skeptical over its effectiveness. In New Zealand, the central bank held the interest rate at 0.25%. Of note, the country increases restrictions again in Auckland as cases of local transmission were detected in the city after being virus-free for 102 days. In individual stocks, SoftBank shares fell over 2.5% after posting a $12 billion quarterly profit. In the last fiscal quarter, the company recorded record losses of $13 billion for its last fiscal year. Mainland Chinese stocks paired some losses by the end of the session. The Shanghai Composite fell 0.6%, Hong Kong's Hang Seng Index rose 1.21%, and in South Korea, the Kospi erased earlier losses and gained 0.57%, while Australia's S&P ASX 200 lost 0.11%. In Europe, stocks saw decent gains yesterday as investors shrugged off the UK economy's record plunge in the second quarter. GDP plunged 20.4%, still above economists' expectations of a 21.2% decline. In June, the economy bounced back 8.7%, also above expectations, suggesting the worst is already behind the UK economy. In individual stocks, Just Eat Takeaway shares climbed over 3% after the company recorded surging revenue and orders in the first half of the year. On the negative side, its pre-tax losses widened to €121 million from €7 million a year earlier. Losses were mainly driven by the merger between Just Eat and Takeaway.com. On the data front, the Eurozone industrial production increased by 9.1% in June after rising by 12.3% in May versus the 10% expected. Annually, the production fell by 12.3% versus 20.4% earlier. The largest decreases were registered in Portugal, Germany, and Spain. In the U.S., the headline CPI increased by 1% in June, better than the expected increase of 0.8% and the previous increase of 0.6%. The core CPI, which excludes the volatile food and energy products, increased by 0.6% after rising by 0.2% previously. Despite the data was better than expected, the inflation was still lower than the Fed's 2% target. In currencies, the dollar was mixed and fairly volatile on Wednesday. The Euro-USD managed to hold marginally above the 1.17 handle and briefly climbed above the 1.18. Earlier on Thursday, the common currency retains its bullish momentum, extending the ascent following the recent correction. Once above 1.1840, the pair could retarget the 1.19 barrier. U.S. stock markets rallied on Wednesday, putting the S&P 500 just below its all-time high set in February. The tech sector shifted into recovery mode after losses witnessed earlier in the week. The S&P 500 gained 1.4%, its biggest one-day jump in over a month. The Dow Jones Industrial Average rallied 1.1%, and the Nasdaq Composite rallied 2.1%. Elsewhere, oil prices rose on Wednesday and even managed to finish above the $45 handle. The Energy Information Administration reported that U.S. crude inventories fell by 4.5 million barrels for the week ending August 7th. That followed decent declines in each of the previous 2 weeks. Gasoline supplies, meanwhile, fell by 700,000 barrels, while distillate stockpiles decreased by 2.3 million barrels. Despite Brent was inspired by the report, the prices could struggle to see further gains in the short term due to the lingering risks and concerns over the pandemic and demand recovery. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.